Well, it's time now for a recap of the week's business news. Wall Street is expected to make some gains today after yesterday's losses, with the tech sector reporting stronger than expected quarterly results. Jameel Ahmad, who's chief analyst at GTC, is with us, as always, for a closer look. Hi, Jameel. So how are the markets reacting then with the easing of China-U.S. trade tensions, the ongoing U.S. government shutdown, and gold down 10% from its all-time high a week ago?
There's a number of different themes that we're watching right now in financial markets. But if you look at the global market picture overall, early this week, it looked like we were going to hit more record highs. But towards the end of the week, we're starting to see some profit taking. We have to take into account the U.S. government shutdown is only one thing that we're watching, but it is close to appearing to be 1 month of the U.S. government being on shutdown, where pretty much we've had the absence of tier one economic data. And if you look at the state of play, it wouldn't surprise us if this government shutdown does continue into November, because there seems to be no end in sight. However, what's held market sentiment is two different factors. One, corporate earnings in Wall Street with the earnings seasons continues to impress and not show signs of slowing down the US economy. And we did have that photo opportunity between the US president and the Chinese leadership, which essentially ended in a truce or an extension of a 1-year deal, which some are looking at. That's how market sentiment. When it comes to gold, I don't think it's been impacted by any of those global themes. But essentially, investors have taken profit off an asset that's moved up 50% this year. It was very close to 4,500 US dollars just last week. It's actually fallen slightly below $4,000 this week before recovering. But now that we have moved below 4,000, I would be just a little bit worried if we head into November and we see some more temptation to take profit on gold, because 4,000 was seen as a key psychological level. And ultimately, the price of gold is still up at new record highs and up 40% or so this year. So that wouldn't surprise me. We'll be watching gold very closely next week.
Now, Jameel, we are indeed seeing that the S&P 500 and the NASDAQ both opened higher on Friday local time, largely thanks to upbeat forecasts from Apple and Amazon, the latter jumping 11%, more than 11% after strong results. So in the meantime, Jameel, the U.S. Fed has cut interest rates because of the gridlock in Washington that you mentioned there. How has this shutdown impacted the Fed's outlook on the U.S. economy?
There was an interesting metaphor that was provided by the U.S. Central Bank this week, where they essentially said that at the moment they're driving through the fog. Essentially, they can't see what's ahead because they have no data to watch, because obviously the U.S. government is not releasing the tier one economic data. And when this shutdown does finally conclude, we're probably going to have a bucket load of data that comes out at once. So the Fed ultimately, they cut interest rates this week for the second straight meeting, which is what we expected. But the interesting takeaway was that we had one member of the Fed that voted for a large interest rate cut. That's an ally of the Trump administration, so we thought that might happen. We actually had one member who didn't vote for an interest rate cut at all. So we were expecting actually all would vote for a cut. And the Fed chair, Jerome Powell, basically said that it's not a foregone conclusion that the Fed will cut in December, which was ironically seen as, because they've got no data to watch, actually that would make them go unchanged. Whereas before we were thinking that the government shutdown will be impacting the U.S. economy to such a degree that the U.S. Central Bank would have to continue to cut interest rates. But maybe that's not going to be the case.
Finally, then, Jameel, rates remain unchanged here in Europe as expected. What else can you tell us about that?
We were expecting this. As actually the consecutive months now that the European Central Bank have left interest rates unchanged. We have to take into account that since early and mid-2024, the European Central Bank has been the most aggressive central bank of the developed world when it comes to cutting interest rates. We are starting to see economic data improve in Europe, with the GDP coming up a little bit above expectations. It's slow and modest growth, but at least it's growth. And I think we're going to be watching for the economic data more closely between now and the end of the year. But we're not expecting any further movement from the European Central Bank, that's for sure.
Jameel Ahmad, chief analyst at the trading brokerage GTC based in Dubai. Thank you very much for joining us today.